Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. Having a plan isn't just for buy and hold investors. It's important for traders to plan as well. Joining me to discuss is Lorraine Gavican-Kerr, Managing Director of Investor Education and Content Distribution at TD Ameritrade. It is great to have you with us, Lorraine. Welcome to Trade Talks.
Thanks for having me, Jill.
You got it. Why are traders overlooking a trading plan? And does this happen with experienced traders as well?
I think it happens with everybody. I think maybe getting started, people are super eager and maybe they jump in a little bit before they've really thought through everything they need to be thinking about. And yeah, I think experienced traders sometimes can get so used to what they're doing because they do it in and out every day that maybe they're not really evaluating against what their overall goals is. So we really talk about a plan being a commitment that's part of the trading ecosystem and what you do every day, year in, year out, as you kind of plan your investing and your trading strategy.
What are the essential components of a trading plan?
Oh, there's a lot. I guess we should start by talking about why it's so important. I think that people often think about, mistakes. If you don't have a plan, I'm going to make a mistake. I would add to that sometimes you missed opportunities when you don't have a plan. So really you need a plan so that you're there, engaged, have kind of thought through all of the things that are important to you personally, so that you stay in tune with the market and really try and execute on your strategy and meet those goals that you have. There's a few core components. I think first is time horizon. So when you're a trader, obviously, there's all different types of traders, people who trade daily, hour in, hour out. They trade every day. Some traders trade every week, and then others hold longer positions. So really, you have to think about what is my time horizon? What kind of a trader do I want to be? What is my style? I think the second piece is really around entry and exit. People often forget about the exit piece. So really, we talk about what are those things that I want to look for when I'm entering a trade. Some traders use fundamental analysis, like really looking at the kind of specifics to that company or to that stock. Other traders focus on technical analysis, so looking at charts. What are the resistance levels, support levels? Am I looking for a breakout? And then a lot of traders use both of those things, and that's really valuable. So really, those entry and exit strategies and managing the trade over its lifespan are super, super important components of a plan. And setting those parameters in advance really sets you up for success, because you can, really take the emotion out of things when you set those types of things up for yourself. The next one is kind of obvious: position size. What kind of a position do I want to take in this trade? People have obviously different tolerance depending on their wealth. So it's really important to look at your portfolio, decide how much you want to put into any given position, and then execute on that. So it might be 1% for some people, it might be 3% of their overall portfolio. Pick something that you're comfortable with. If we're ever talking to clients, the first question we ask is your risk management. Are you comfortable with this trade going 100% against you? And if not, recalibrate, think about those numbers again. And then core to everything we do at TD Ameritrade and Schwab, risk management. Not just when things kind of start to go against you. Risk management starts before you even enter into a trade. How am I going to manage risk if this trade is, going really well? When do I take profits off the table? And if things aren't going so well, how do I protect myself on the downside? And what are those things that I'm putting in place? And then finally, constantly evaluating how you're doing. I think about it in terms of if you have a plan for diet or exercise, you're constantly looking to see, well, what gains am I making? How are my biceps looking? It's the same with trading, looking at everything that you're doing and making sure that you kind of recalibrate and check in on your progress as you go through that.
I think it's such a great point that you make. It's so much easier to get into a trade than it is to exit it. And we've seen this, most recently when risk isn't managed, what can happen, whether it's a bank blow up or your portfolio blowing up. So I think it's really important that you stress risk management is, just as important as it is getting into a trade. Lorraine, my question to you is, when you have a trading plan, do you set it and forget it? Or is it something that you have the flexibility to change as the market evolves and as market conditions evolve?
Absolutely. I think that a trading plan, investing plan has got to be flexible. The markets are very, very volatile sometimes. We've got kind of external factors to kind of those things that affect it. And then obviously inflation has a huge impact on portfolios. You have to be able to flex. And that's one thing about a trading plan. You need to be able to test it. And I kind of talked about checking in constantly to see how things are going. that is when you pivot. That's when you decide, okay, this isn't working, or I've learned this from what I put in place. It doesn't work for me. And I think it's incredibly important that you have flexibility in that plan. So definitely not something you put aside and don't kind of stress test from time to time. That's core to trading.
All right. Appreciate the insight, Lorraine. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.
Thanks, Jill.